Ignition sequence starts. 6, 5, 4, 3, 2, 1, 0. Liftoff. We have a liftoff.
Hey everybody, this is the Digital Asset Investor, and I can hear my wife and my 8-year-old, and they're in there arguing over whether or not he's going to wear a green shirt for St. Patrick's Day. He does not want to wear this green collared shirt, but he agreed to it before today, but now he refuses to do it. He is a hard-headed kid, and I don't know where he gets it, and that's a joke. Jeremy Hogan sent this out. This is about John Deaton, the attorney John Deaton's motion to intervene that had been what looked like rejected by the judge, but it really wasn't. He says attorney Deaton's motion to intervene is not dead on arrival. The judge basically said he has to submit a letter first telling her what he is going to file before he files it. It's a local rule and honestly not very common. The motion can and will still be filed. And he's retweeting John Deaton's tweet, which is right here. What did I say about being knocked down and how we respond? It was denied without prejudice with the ability to refile in accordance with Judge Torres' local rules. This simply means it must be refiled as a letter motion. I'm on it. Please don't get discouraged. Okay, so he's in the game still. And then there was this from 432 XRP. Not everyone is buying into Bitcoin sales pitch. Shelton is not the only one offering a counter narrative. Listen to this clip from CNBC, Judy Shelton.
The story behind the story on all these NFTs is that the dollar is being turned into a cryptocurrency, whether it's USDC or Tether, and that's the on and off rails to many of these cryptocurrency applications. Do you have a view on whether the Fed should just issue crypto dollars directly as opposed to relying on intermediaries and seeing this market for indirect crypto dollars develop over time?
I think the Fed has been remarkably accommodative of all of this fintech innovation. And I'm glad, because I think that's healthy. All of the cryptocurrencies have one big disadvantage compared to the dollar. When you use them to make purchases, you end up having to pay taxes, capital gains taxes, because they're not treated like the dollar. So the dollar has an exalted position. I can see benefits to having a digital dollar, and we don't want China to get ahead of us on that. But I also can see that if the Fed has a tendency to say what we think is good for the economy is the way it's going to go, even if it does damage to the idea of our currency as a store of value or as a reliable unit of account, then they will tend to do that. And I mean, always with the best intention. But if people had accounts, let's say directly at the Fed, digital accounts, I'm concerned that the Fed might decide at some point even maybe negative rates, like at the European Central Bank, would be better stimulus. And so what does that mean? That your depository account at the Fed gets diminished and it's all in the best interests of economic growth? I think people are attracted to cryptocurrencies because they like that they are decentralized. They like that they are meant to be a unit of account, a medium of...
Listen close to what she says here at the end.
And a store of value. Right now, where most cryptocurrencies are thought of in terms of how they can be translated back into the local currency, they're not a reliable store of value. But ultimately, I think the idea is that people are looking to alternatives, and the Fed should be competitive and innovative, but we should also be concerned if the Fed at some point decides that it wants to crush the competition.
That last line is pretty scary, and I feel like that I feel like that's a possibility of what they're not necessarily crush, but I feel like that's a possibility for what they're going to do to Bitcoin when the time comes. Now I want you to listen to this, and I catch a lot of flack for telling the truth about what Bitcoin is and what it is not. One of the things that it is susceptible to a 51% attack because it's proof of work, and proof of work does not work. It can be controlled, and people in this clip right here, you'll see. And don't forget, at the end when he's talking about who might have an incentive to do this, there are people who could amass billions of dollars if they wanted to do this. Bad guys, listen.
The belief is that the supply of Bitcoins is fixed at 21 million, that's all that there can ever be. And in fact, I told you this 5 minutes ago. And this is true if you look at the Bitcoin code and so forth, but the reality is that that code can be changed. The blockchain can be forked if 51% of the people agree to go down a fork. So somebody tonight could say, let's change it from 21 million to 30 million. And if you can get 30% or 50% of the people to follow you in the direction of a different limit, the 21 million would be gone. What this reduces to is essentially mob politics, that anyone who can get 51% to go down that fork, and we've seen a lot of politicians around the world get people to follow them for crazy policies. We don't need to name any names, but some should come to mind pretty quickly. I told this to the central bankers, that this is monetary policy by the mob. They're trying to replace you with rabble-rousing charlatans, and they all, everyone agreed that this is far worse than the enlightened central bankers and so forth. Now, let's talk about the central bank going into the business. Yeah. It's a good question. Like, who are the voters on Bitcoin? It's people who operate nodes, but anybody can hook up and become a node operator right now, right? So I have a whole nother lecture on, what's it mean to be democratic and what's governance mean. If you wanted to crash the Bitcoin network, you just need to double the network plus one machine. And then you have 51% by yourself, right? Now, what would this cost? $200 million of hardware? And this seems to be an arbitrage condition that is somehow violated in the market. Who would have a motivation to do this? It's not hard to think of people, like Chairman Kim, Chairman Putin, ISIS, whoever.
Scary stuff. Okay, I saw this from Binance. Collect and win promo for Kava Labs and Hard Protocol. $50,000 to be won. They're running some kind of contest here. It looks like from the 17th through the 23rd, you can win $1,000. 10 winners are going to win $1,000. 30,000 all qualified. Split 30,000 in Kava and Hard. Anyway, I haven't gone through all the details of the contest, but they're doing it from the 17th to the 23rd. Now, it says Binance. This is at Binance's handle if you want to go and click on this link and find out about it. I'm not sure if that applies to Binance.us as well. Then there was this one from Kava through the partnership between Hobby DeFi Labs and Kava. Hobby Global, Bitcoin, HBTC rewards are now live. Earn using Kava DeFi platform products and services through Hobby.com. I don't think we have access in the United States to that platform, but a lot of you around the world do. Liquid XRP sent me this. Now, this was a video that I clipped this from that was on YouTube. I don't know if it was a recent one or not, but this is an interesting clip where Naveen Gupta from Ripple is telling you why the central banks are so comfortable and love the idea of working with Ripple.
Suddenly there is a 10% decrease in your total working capital requirement. And when we explain this to the central bank to essentially say, hey, just by increasing the velocity of money, exactly what they're trying to do in the domestic payment system, we are able to do it in a cross-border payment system. And you are able to get a higher growth rate because we are able to turn around money much more faster, exactly. Think of money as inventory, and then you are churning into more cycles, and hence you are able to get a better GDP output or a better growth rate. They love it, right? And the other part that they love is that we work only with regulated financial institutions, because one thing central banks worry about is unregulated, unscrupulous actors essentially getting into the space which they are not able to manage. But once we are working with banks or PSPs who are already regulated by the central bank, they have already seen 10, 20, 30 years of performance and behavior from them, then they feel totally comfortable, because then they say, even if it's a new technology, what we are doing is we are empowering existing players to become better. And then, of course, the benefits to be passed on to the citizens or to the corporates, whom the central banks serve anyway.
Okay, good stuff. So, and then there was this from Wrath of Kahneman. Ripple partner SBI has purchased 5% stake in Rootant, a blockchain supply chain finance company based in Singapore and is a key player in China. Rootant uses R3 Corda, another SBI investment, and for the back end and apps with a focus on usability. It says Rootant bills itself as #1 digital transaction banking fintech in APAC. If SBI is a part of Japan moving away from China in some ways, perhaps XRP moving through Corda becomes advantageous, but there is no indication of this happening so far, just something to monitor. Well, when I see something like this, it immediately reminds me of this clip with Chris Larson.
Shipping container is super basic, and why it's so profound.
By the way, I can still hear
shipping goods.
Hold on, I'm going to go back. I can still hear my wife and my 8-year-old arguing over this green shirt back there.
Shipping container is super basic, and why it's so profound is before the shipping container, of course, shipping goods was super labor intensive, super inefficient, like moving money is today. You'd send stuff to a port, it had to be unpacked right there at the port, repacked. It was a huge drag on global commerce. And then along comes a shipping container, so the goods stay in that container at the point of manufacturing, sent right to their local port through a truck, a train, then to a ship, back to another ship, another train, another truck, interoperable in any port around the world. And when that was created in the 1950s, 700% increase in global trade, completely transformed ports everywhere, created a Cambrian explosion of new types of shipping
There's
companies.
that word again.
It's exactly what you saw with the internet, by the way, and it's exactly what you're going to see with a very low level. Again, that can't be Bitcoin or Ethereum or the XRP ledger. That will be a part of what happens here. But those things are heavy, they're thick, they're shipping companies with certain features that will never be acceptable to everybody in the world. You need something super low level, something like the interledger protocol is what we believe in, which is super basic, it's not a ledger, and just like not a shipping company, but something that the Chinese can get behind, you can get something in the developing world could get behind, Gates Foundation could get behind, which they have, the Americans could get behind. Very basic, very simple.
Okay, good stuff. Now, this, what I'm about to show you is to me, it's so important that you really get this in your mind, what is about to happen. Remember that I've compared on this channel what's going on in digital assets to the .com boom a lot. This time I think it's different in a couple of ways. The first way is that this time we have two choices. You can either invest in private equity, or you can invest. This time we're able to invest in digital assets as well that are a lot of times have use cases that are promoted by companies and different things. Now, but here's the part of this that's really going to ignite all this. We've seen this market boom and everything, but I think that you really haven't seen anything yet. I think the real spark that's going to blow all of this stuff sky high, and that's the equity and the digital assets, is when you see the Coinbase IPO. And then when that one busts through the door, then you're going to get Wall Street's full participation. And it's not just going to be in the equity, it's going to be in the digital assets too. You're going to see I'll use Chris Larson's words, you're going to see a Cambrian explosion in freaking equity and in digital assets from once that first IPO goes through the door. Well, yesterday we saw this. Kraken is going to have their stock market debut next year. So you got Coinbase, which is right here. This was this morning. Coinbase has filed a prospectus for its public offering, revealing it plans to raise nearly $1 billion from the resale of 114,850,769 shares. Okay, so how many? I'm going to make a point here that this might blow your mind when you really think about it. Coinbase, as of late 2020, has 43 million users. Okay, now I've been showing you this, and I want to show this to you because a lot of you might not know. Coinbase is a great company, but it's not the only show in town. You also have You also have places you can buy crypto like Kraken and Uphold. Look at Uphold for an example. It's trading at $4 a share. They've got 5 million members to Coinbase's 5 million users to Coinbase's 43 million. I could argue that Uphold is a much better platform than Coinbase. There's many more different things that you can buy into currencies, gold on the blockchain. You're even going to be able to buy into some of this private equity through Link2 pretty soon. I would argue that Uphold is a much better platform than Coinbase. They don't have as many users, but they've got 5 million to the 43 million Coinbase. Coinbase was just valued at $350 a share, like in the last $350 to $375 a share, with 43 million users to Uphold's 5 million. And Uphold, I remember when Uphold was selling for like 40 or 45 cents on this Link2 platform. And by the way, that's in the description of all my videos. linqto.com. You can also download the app. I've got a link to that in my description of my videos. But you want to talk about opportunities, folks. These things, I mean, they're sold out, I think, of Kraken right now, but they have some Uphold on the platform. But there's Kraken, but all of these things, I believe, are coming. Probably most of them are going to start hitting in 2022. We're going to see Coinbase first. But you want to talk about a frenzy. And they also recently added this one, Bloomreach. They don't just do blockchain things. Bloomreach is I think it's an AI company. An API company that helps e-commerce customers create, personalize, and scale commerce experiences. So anyway, but this is, talk about opportunity between digital assets and this. Riz XRP sent me this yesterday. David Schwartz, or it was released yesterday. David Schwartz was on the Thinking Crypto YouTube channel, and he had 2 interesting clips that Mickey B. Fresh had put up. Here's the first one about Polysign.
What's Polysign about? Any connection to Ripple, and then plans to work together, things along those lines?
Yeah, I'm an investor, an advisor, and a board member of Polysign, and it's annoying to me that I can't talk about, but I will say that great things have been happening there, and even lately the pace has accelerated. One of the interesting things is, like, our primary focus, at least as we've been public about, is custody. It's like allowing people to hold cryptocurrency and do interesting things with it. And the amount of money that you can make in that field tends to go up or down with the value of cryptocurrency.
Right.
Because, like, if the total value of cryptocurrencies is low, then there's not much value in helping cryptocurrencies move around or allowing people to do interesting things with them. And so the bull market has been tremendously helpful to Polysign. It's helped us forge strategic alliances. And unfortunately, I wish it's super exciting, and it's just frustrating to me that I can't, like, tell you what's going on. But I will say, Arthur Brito put together an incredible team. The employees are amazing. People who just love cryptocurrency and just love exploring what's going on with algorithms. We're doing really cool things, and I wish I could tell you about them soon. As soon as I can, I'm going to call up everybody who's ever asked me, and I'm going to say I can talk now. But yeah, I can't yet. It's kind of annoying. Sorry.
Okay, so that's about Polysign. Then Mickey B. Fresh had also put this clip up about the Flare network, where he's commenting on that.
What Flare is doing is they're taking bits and pieces from many different blockchains, like Avalanche's consensus algorithm, and they're taking some of the payment and account ideas from XRP, and they're looking at some of the DeFi from Ethereum. They're trying to stitch that together. And what it's going to come down to is their judgment, whether they build a Frankenstein's monster or something that solves real problems. And I think one of the big advantages that they have is that they have an idea of what the use cases they're going to be targeting are. And they're like present day DeFi use cases that have kind of proven themselves. So if they can build a system that's really useful for that, I think that's important. So these are use cases, unlike NFTs. Like with NFTs, people don't seem to care that much that they're decentralized or censorship resistant. Like if you look at the big projects, nobody even knows or cares what blockchain they're built on. Like, right? All we care about is that we get a great user experience. But in the DeFi space, where you're talking about manipulating money, it's completely different. Like the infrastructure matters and the fees matter. Like if you build a project on Ethereum, it's not just a matter of like, oh, people have to pay these high fees, but the fees are unpredictable. Like if I'm reliant on being able to submit a transaction to your project 3 months from now, I have no idea like how much that's going to cost.
Right.
And so they're very focused on those real world problems. I'm hopeful that they'll be able to build something that like provides great solutions. They're really smart. They've taken on a pretty broad challenge, but I mean they're a fantastic team.
Got it. And some folks that ask, what's the relationship between Ripple and Flare, or completely separate entities? Flare's doing their own thing, or are you guys helping build anything with them?
I mean, so we, before Ripple X, we had this thing called Spring with an X, and we invested in the Flare team, and we love what they're doing, but they're not. Just to be clear, like we don't tell them what to do, and they're not in some sense like committed to. I mean, they're committed to the XRP ledger from their own commitment, but we haven't like sworn them to loyalty in any way. Like they're going to build on the technologies that they think are best. And this is something that we discovered at Spring, which is like if we go.
Okay, so but the important thing out of that is he was talking about the Ethereum gas fees, and the Ethereum fees have become a complete disaster because proof of work does not work. More truth that some people don't want to hear. Ethereum fees have become a complete nightmare, and this transition to Ethereum 2.0 has become a political thing. It's a disaster, and that's why you're seeing this. That's why it's not a coincidence that you're seeing these Flare IOUs going crazy, because people know what's coming. Listen to what this is on CoinDesk, listen to what they're saying about what's going on with these Ethereum fees and the miners and everything.
Last week, but the miners were not. They were up in revolt. Apparently, they do not like EIP 1559, which is kind of changing the whole transaction fee method for working with Ethereum. If you've ever used Bitcoin or some sort of blockchain, you know that like you have to send a fee along with your payment. In the same way that Visa kind of bakes in a fee and normally is issued to the merchant, Bitcoin and Ethereum make you pay the fee up front, and it'll be like in your wallet, costs like maybe 2% of the total transaction, a lot of times less. And miners recently on Ethereum have just been like gorging on the Ethereum fees. It's been nuts, like millions upon millions of dollars weekly, and it's been pretty great for them. But it's not great for the average user. And so now a big proposal is going to be put into the Ethereum blockchain in July in a hard fork.
So you see what's going on is what you're watching in both Bitcoin and Ethereum is you're watching a couple of prototypes is what you're watching. They're a disaster because proof of work doesn't work. Now you can either acknowledge it because it's right in front of everybody's face, period, and everybody knows it. Even the Bitcoin maxis know it. Even the Ethereum maxis know it. Bitcoin and Ethereum were never the ones. I'm a digital asset investor. I'm not an investment advisor. This is for entertainment purposes only. Please subscribe, hit the like button, and tell your friends and family. Or ask your friends and family, how are those Ethereum gas fees treating you? Thanks for